Good morning, everyone, and welcome again to the simple setup most traders miss. Now, for those of you who do not know who I am, I come from the hedge fund space. I've been working there for about 20 years, a little more than that actually, and I have been blessed to be a part of some award-winning Star Search teams there, and also the team that was honored in the Futures magazine back in 1998 for top new hedge fund CTA manager for that year. Class. It was a class of several managers. I've also authored the book called Dynamic Trading Indicators, and that more or less discusses the value charts concept that I developed early on in the 90s as an engineering student in college. So that's my background. I've been a speaker here domestically and also overseas with Bloomberg events. And if I sound a little hoarse this morning, I apologize. The constant battle down here in Austin is with allergies, and it's never ending. I've never won that battle. So I apologize if I sound a little scratchy this morning. Okay, let's go ahead and move on here. Risk disclaimers. Trading or investing carries a high level of risk. Everybody should see the risk disclaimer slide, and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. The most important thing is if you cannot afford to lose money that you're trading with, I highly recommend that you don't trade with it. Now, we're not trading, obviously, with the intent of losing money, but you don't want to subject money to risk that you cannot afford to trade. My humble opinion, I care more about you and your family and your well-being than I do about you trading, if that makes sense. Now, CFTC Rule 4.41 states that hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. I'm not really going to show any simulated results this morning. I will show some examples, and I'll take requests from the group here this morning about what symbols you want to look at, and we'll search out for some good examples that have happened recently of the surge setup for different markets that you suggest and different time frames as well. Okay, let's see. The demos. Harry's asking the question, when you send out the recording, will it include the demos at the end? Yeah, the recording will include Q&A. I'm not sure what you mean by demos, but it'll be all inclusive. So I'll stop the recording when we actually close down, so it should have everything you want. Bob, you say no sound. Let me just type in a message. Try just 1 second here. Try to okay. Excuse me for this, folks. Trying to help everybody here. Okay. I think we're ready to roll here. So, fundamentals of market cycles. Now, this graphic I thought was great, but this is really dealing with more of a long-term perspective on cycles, but the psychology really is the same for shorter cycles that we're looking to take advantage of in the market. So the cycles that relate to the surge setup relate to very short-term cycles in the markets. They can be intraday, 5-minute chart based, 30-minute, 60-minute, 120, 240, or daily. Daily is really my primary time frame for finding these setups, but 240 is really good as well. So, but the emotions that we experience is very similar, across all cycles. So, shorter term, this is interesting how we build up optimism and excitement and thrill and euphoria as the market cycles go up. And this is just also, our greed increases as the cycles go up. I'll show you another graphic here in a minute. And then if we're holding a long position, we start to get a little nervous as the market turns here, starts to head down, denial, fear, desperation, panic, and then capitulation for holding a long position right near the bottom, and then despondency, depression, hope, relief, optimism. So this right here, they label this as the point of maximum financial opportunity. All right, so that's one of the reasons why I threw this up there this morning, is because that's what we're after. And this is what we're looking at in cycles. We're looking at doing the opposite of what our emotions tell us to do. We want to buy into these cycles when the market has corrected a little bit, or at least has rested or consolidated a little bit. So just keep that in mind. Now this is also a blurred graphic, and I apologize for that. I had to stretch it and enlarge it, but this gives you a little bit of an idea of how there's cycles within cycles within cycles. So we could have a longer term, this primary cycle is right here in this graphic, a 4-year cycle, but this is really true even in all the shorter time frames too. We have that, and then we have our secondary cycle here, and then we have, even a smaller cycle on top of the secondary cycle. So there's a lot of cycles within cycles within cycles, and we're interested in the surge setup and going after the very short-term cycles to take advantage of a condition in the markets that is going to put the odds in our favor. And that's the design of what we're after there. But just understand that cycles are across all time frames, and you can have cycles within cycles within cycles, and that's what I'm trying to point out with this market cycle model here. Now, the market price action, the price discovery process often unfolds in a cyclical pattern, which with ebbs and flows in price action. If you notice, this doesn't always have to be the case, but quite often it is, and that's why we're interested in at least being aware of cycle tools or cycle-based tools, and that's why we are interested in looking at the setup today, because quite often the market does unfold very nicely, in an ebb and flow or a very smooth cyclical pattern, and we can use that pattern for two reasons or for two purposes here, and I'll show you what both of those are in a minute. Now, it's also important, as I say, that we can use cycles, that there are times where cycles are not very effective, but when we do use cycles, we're looking at the period as being one of the primary tools or readings we can get from the cycle. And what that means is the peak, in fact, I'm going to change my color here so it makes it a little easier to see. So the peak up here to the peak over here is the period. So that's the length from peak to peak or from valley to valley down here. And it doesn't necessarily have to be exact, although sometimes it's amazing how close that actually is. But you can get a feel for the valley to valley or peak to peak with cycles. We're also interested in the surge setup with studying the amplitude and how that supply and demand forces in the markets push the amplitude above zero and below zero and reflect the strength of a certain wave of selling or wave of buying coming into the markets. So market cycles can often experience predictable amplitudes and periods, and it's these characteristics that we're planning on exploiting with the surge setup. Predictable periods make it possible to predict market highs and lows. So again, the period is an important aspect or characteristic of the cycle, and this is just a simple sine wave graphic. The amplitude as well is part of the reading we're going to take away from the surge setup, and that's kind of the requirement, step one, in the surge setup as well. Cycles in price action. Cycles can be highly effective for explaining and predicting the price discovery process in markets. Okay, very important to understand that. It's also important to understand that cycles can be very ineffective at explaining price action in markets at times as well. So this is one of those tools that it's not, I believe it's very simple to gain a feel for this, but you have to spend a little bit of time studying the cycle indicator with your markets and time frames, and you're going to start to see periods where the cycle indicator may not be as effective. It's really pretty easy to see without a lot of study time, and then you're also going to see times where the cycle indicator is highly effective. So important to understand that as well. So I'm not presenting something this morning saying it's a 24/7, it always works, and it's always something that that's valid. It's not, and it's important to understand there are times where cycles are indeed ineffective in the markets. Now, cycles and price action, determining when to use cycle indicators is a judgment call. Don't be afraid of that, or don't be bothered by that, okay, because that's okay. Now, there are some technical analysis strategies or studies out there that are very complicated, and at least I find that are difficult to read real time. Right? This is not one of those, in my opinion. This is one of those that's very easy to read in real time. Okay, and this is one of those that I believe that any of us, any of you, we can use this as an effective setup tool. Okay, and Rodney, bear with me. I'm going to take questions here in just a minute. Let me get to my graphics here, my charts, and then I'll start to address a few of these questions here. So determining when to use cycle indicators is a judgment call. You want to see your cycle indicator in sync with the market price action. So very important, and again, it's not necessarily difficult to see that. You'll start to get a feel for it, and you're going to see when cycles are on or when the 2MA surge indicator is on and when it's not. All right. Now, this is usually what happens. Just to take a step back and look at the cycles in the markets, this is what happens if we let our emotions dictate how we trade the markets. We're seeing prices run up. If we're looking to be a buyer, then we don't want to miss out anymore. We end up letting greed get the better of us. Then we buy up here at the top, and then prices start to correct against us, and then we start letting fear set in. We capitulate near the bottom, and then all of a sudden the market shoots back up. We don't want to miss out, and then the same process repeats over and over again. We do not want to trade using emotions here because that is a losing proposition. We're wanting to take advantage with this setup of a correction, within a correction, and hopefully very close to the bottom of a correction. This is exactly what we want to do right here in this slide. So when the setup presents itself, we want to buy in the trough, if you will, and then possibly stop buying if we drill down on a shorter time frame, at least stop the buying process near the sell area at the peak of the cycle. All right, so, and again, you bear with me here. I'll get to questions here in just a second, just going over some basic fundamentals here. Now, when not to trade with cycles, when not to use cycles. There are times when market price action does not move in cyclical patterns. Periods of randomness or noise are prevalent. You want to avoid using cycles in those times. And again, it doesn't necessarily have to be a difficult thing to determine. A lot of times, for example, a lot of the markets after, futures markets at least, after they open up for the Asian session, they just kind of die on the vine. So a lot of the volatility dries up, and they don't do a lot in Asia hours, not always, but oftentimes they're slower. Those are times where you may not want to necessarily use this setup. So we like to see directional price movement. We like to see more volatility in the market that we're trading, and I find that really any setup is better that way. So understand that there's not always a time to use cycles or use the setup we're teaching today. Now, what you could do if you find your cycle indicator not in sync with the market is when your cycle indicator and the market are not in sync, consider adjusting cycle parameters to see if you can improve the results. So it's almost like adjusting the equipment to pick up on the true market ebb and flow or the true market cycle. And keep in mind that cycles for every market are a little bit different. So some, and every period even, they can be different as well. So some may be a little longer term with the price action. And if you're trying to use a really short term setting, you may not detect that longer term cycle action in the market. So you want to use a little bit longer term combination. And I'll show you that here in just a minute. Other times you'll see that cycle in the market is really better, detected with a very short setting. So, or a pair of settings. So it's important to understand that. You can look at where the most predictable cycle wave is in the market, and then you can modify your 2MA indicator here, I'll show you in just a minute, to pick up or detect that. And it's really not that difficult. I'll show you how to do that as well. There's a couple of settings that I tend to prefer myself. So this is an example right here of what I consider to be a poor fit here. So the 2MA cycle indicator is not doing a good job of necessarily finding the cycles. Not terrible here at first, but then all of a sudden we have this big surge up here. It just doesn't seem like it's doing a super job. Not terrible, but not great right there. So the settings right here are not necessarily maybe the best settings, but we do have a little bit of strange, consolidation, and all of a sudden we break down. We have a little consolidation down here. Then we see gold rallies up on the daily basis, and we go in consolidation again. So the gold price action is a little bit strange and hard to track using cycles, using these cycle settings right here. There are possibly shorter ones would make more sense. Now, to me, this would be a better setting here for gold daily on this other example. We see that we can detect a little bit of a consistency in the cycle lows here. That's what we want to see. It's not always. We get a little bit of noise sometimes, but it's a little bit better in terms of what's happening here with the cycle indicator. Again, a little noise up here, but this is better. So I would say this is probably maybe a C plus or B minus, cycle settings in sync with the gold market that serves as an example of what might work with what we're looking to do here. Now, let me just take a few questions. Are we talking about consolidating or sideways markets? Raymond, we are not. We're looking, I'm sorry. If you're talking about when not to use the cycle indicator, yes. I'd say when prices are consolidating, when there's little to no volatility in the markets, and I'll show you a few examples here, that's when you really, it's not only the cycles, but it's everything stops working as well that's based on wanting to see directional movement in the market to take advantage of a setup. So this is no exception. This indicator is the one you're getting for free, and that's called the 2MA cycle. It is available on TOS. You will get an email, and I told the folks on Thursday I thought that would come out on Friday, and I apologize for that. That looks like it's going to come out definitely by the end of Monday from what I've been told, and I think this morning's webinar was delaying that. So again, thanks for your patience, those of you who came on Thursday. You will get it by the end of Monday, and it has been developed across TradeStation, Thinkorswim TOS, NinjaTrader, eSignal, and Sierra Charts. Okay, let's see here. Other questions. You find that cycles show up well in trading ranges, a range of markets, and not as well in strong trading markets. Rodney, not necessarily. All right. Yeah, sometimes they can. Now, trading range markets, they can be pronounced there. But even in the trending markets, there oftentimes is a very predominant cycle with where you see the amplitude. If it's an uptrend, you may see the amplitude of the cycle stay above the zero line, like up here, right? And if it's a downtrending market, you may see the amplitude remain negative and not really push into positive territory. I'll show you a good example of a couple down markets we've seen lately, those being the Euro-US dollar cross and crude oil on the dailies have had some really nice downtrends, and you'll see that those cycles have been fairly well defined, but they've been underwater, almost under the zero marker there. So would ADX above 20 benefit this indicator? It doesn't have to, Hugh. It can, but the setup you're going to see today with the surge setup is actually one that doesn't have to have strong trending conditions. It can be either it can be wide swinging range bound conditions, or it can be trending conditions. So it works well in both. Okay, so, Matt, you're asking, is this available on stockcharts.com? No, it is not. But if you want to send us an email, if they allow us to develop the indicator for them, we can certainly try to do that. So it's just a matter of not our side; it's more or less their side. If they let us develop that indicator, we can certainly try to do that if we have enough requests for it. Okay, but we do have it across 5 main platforms that are pretty popular out there, so that will be available in those. All right, onward and upward. 2MA cycle surge rules. Let's take a look at these. Now, this is I'm keeping things really simple today. Okay, for the buy. In fact, let me change my color to green so it stands out here. For the buy surge setup here, rule number 1, we want to see a strong positive upcycle, strong upward amplitude first and foremost, ideally. Okay, so we have our zero line down here that you saw, that was the red line, the indicator, and you want to see the cycle break above the zero line, and it be, we want the cycle to be readable. We want it to be in sync with the market, but that's step number 1. We want to see that positive amplitude there. Now, let me say this. It doesn't always have to be a huge surge here. Sometimes there are times where you may want to take advantage of this setup and there's really a very small surge and you have a reason for it, okay? So I'll get to that here in a second. But ideally, you want that presence of buying there in the previous upcycle, and you want the buyers to be alive and well, at least active in the market. Number 2, you don't want any negative amplitude. I'm going to change my color for this 2 area. I'm going to use blue here. So on this downside cycle setup here, you don't want the cycle bottom to be negative. So I want it to come right back down to the zero line in a perfect world, very, very close to zero line. I don't want it to be above the zero line by much. I don't want it to be below the zero line by much. I want it to come right back down to the zero line. Okay, now it's important to understand that this may be reflecting that the market is not selling off, but it's a failure to sell off. It's a failure for the sellers to come in during their down cycle time, if you will, in a meaningful way. So it's just telling us there's an absence of selling strength in the market. So that is rule number 2, no negative amplitude with following down cycle. So that's after the up cycle. And we want a near zero trough, if you will, down at the bottom. In fact, let me change my color one more time here. I'm using the PowerPoint pen here. I apologize. It's a little bit quirky with me pulling up the menu here to pull that up, but it's more consistent and reliable than the one I found on GoToWebinar. So that's why I'm doing it. Sometimes the GoToWebinar ones causes problems. Okay, now number 3 here, we want our strong positive upcycle surge in prices. So this is the red, right? We want to see that go, in a perfect world, at least eclipse where the buyers came in before. So the theory behind this is we've got kind of 1, and then we've got this trough here, 2 coming down to the trough, and then we have the third part where we hope to see the buyers come in after the sellers failed to come into the market. And the cycle is detecting that. So the first surge up, we have buyers that are alive and well, and then the market it's the seller's turn to come in and do what they're going to do, whether they're going to push prices back down or really not do much of anything. That's what we're looking for. So the theory is that the buyers were alive and well before, so there's a good chance the probability favors the buyers coming in a second time here, especially with the absence of strong selling and pushing prices higher here. And I'll show you this in charts, so don't worry about that. Now, we have one question. What is amplitude? Amplitude is actually defined in sine wave logic or cycle logic as being the distance, this green arrow here, from the zero line to the peak of the cycle or the valley of the cycle. So this is a positive amplitude right here, and that's detecting buying strength in the market. Okay, what again establishes a zero line? Brian, this is the construction, if you will, the design of this indicator, the 2MA cycle indicator, is a comparison between 2 weighed moving averages. All right, so when one moving average is above the other, it's positive, the shorter one, the fast one. When the fast moving average is below the longer term moving average, it's negative. So it's a oscillating indicator, if you will, and that's what creates that just oscillation around 0. But the zero line ends up being helpful for us with this indicator as a baseline to detect the absence of selling in the buy case or buying in the sell case. Let me get through the sell example here with the rules, and then I'll hit some questions here. So for the sell side, it's just the opposite of the buy side, exactly the opposite here. Step 1, we want to see strong negative downside cycle, a negative amplitude here. So a downside cycle in a perfect world, and then we want to measure that from 0. Okay, and then for step 2, again, I'll change my color so you can see the different steps. So step 2 right here, we want to see no positive amplitude with following upcycle wave. We want this to end near 0, and we want this to peak out right near the 0 line right there. Okay, and then step 3, just opposite of what we showed you before, I want to see strong negative downside cycle surge in prices. So this is where we want to see the cycle come down at least to where the previous valley was down here. But this represents selling coming in the market, pushing the cycle indicator in the negative territory. The buying response was weak or even non-existent. And the third part here is the sellers coming back in, and pushing prices down again. So what I find is in markets quite often is that there's a propensity for the buying psychology or buying strength or selling psychology or selling strength to be present, and it doesn't necessarily disappear immediately. All right, so that's been my experience and what I see in price action with the price discovery process. And so we're looking for the selling presence here, lack of buying presence, and then we're predicting right here that the odds are going to favor a follow-on selling presence again in the market. All right, so very simple 3 rules here. Moving average are based on, good question. Moving average are based on the median prices. So the average of the high and low divided by 2. I like to use that more so than the close. Close can cause distortion sometimes. The two moving averages are weighed. Now, again, when you talk about moving averages, we have a give and a take. There's the three that I looked at for this at least were simple, weighed, and exponential. Now, with simple, we have too much of a lag involved. So I decided to not use simple for this indicator because there's just a little bit too much lag there. We want the cycle to be, not lagging too much. Now, there always is going to be a slight lag when we talk about moving averages, but we've tried to reduce that with the use of weighed moving averages. Okay. Would it be to say that the support and resistance lines could be drawn on the price chart where price cycles at peaks and troughs? I don't know if I'd say, yeah, maybe after the fact, but I don't know that I'd necessarily say support and resistance lines. I think it has more to do with the strength of selling or buying in the market running out of steam. So maybe it's the shorter term traders pushing price. They only have limited resources and they can only push price so far. And when they start to overextend or push prices within the bounds of their resources, then the market runs out of steam, and oftentimes it's the seller's turn or the opposite market force's turn to come in and do just the opposite. Okay. What if the surge is down from zero and continues way above the zero line? How do you handle that situation? That's a very good question, and I'm going to show you that. I'm going to show you an example of that in gold on Friday and what you can do about that. Now, would pivot points be an advantage? Pivot points can be helpful. All right. So, but the advantage is that a pivot point can confirm the presence of a turn. Okay. Now, the way this works is with most pivots is you have the ability to designate a left shoulder strength and a right shoulder strength of the pivot. So let's say this is the high right here, and we're expecting to define a cycle high. Then we may say I want two lower highs, 1, 2 on the left side and one lower high on the right side to define my pivot. You could say I want a stronger pivot and require two lower highs on the right side of the high as well. Now there's a give and take here. If you require a more pronounced pivot here, then you're eroding your profit potential because the market's already moved in the direction that you want to trade. Now, we're not really looking at pivots here per se. We're looking at getting a feel for when we expect these highs or lows to happen. I'll show you how you can trade this, all right? And I'll show you a failed cycle surge on Friday, and one in gold and one that worked out really well, and how I would have traded these and how I recommend trading these, because that's an important part of this approach, at least in my opinion. But you can, there's a number of ways you can trade this, all right? So the pivots are not really part of this, but they can be useful in actually confirming that. So when you see for the highs, the confirming lower highs on the left and right, you can confirm that possibly a turn or a peak has taken place. Opposite would be the low pivot, where you say I want two higher lows, 1, 2 on the left side, and maybe one higher low on the right side next to my low bar there. That could be logic you could use, or two higher lows on the right side. You can confirm that the pivot's happening, and this can be just a good confirmation tool as well. Would RSI complement this? It might, TJ. It might complement this, but in general, I'm just presenting this as a standalone tool. So you really don't. You could have a lot of other tools that can complement this and create confluence strategies, but in general, I'm just teaching the surge setup here, and then you can use whatever you want to try to complement this and build this into other types of strategies that complement each other, where you see a number of things happening at the same time. The stars are aligning, and what that does potentially is increase your probability for success. Okay, so let's take a look at an example here in crude oil, and then I'll take some questions here. This is a good example here. Remember our 3 rules we talked about. First rule is we have our cycle coming up here. We have the presence with this arrow. This green arrow represents a positive amplitude in our cycle indicator. This represents that the buyers did come into this point and push prices up. Now 2, again, I'll change colors here, but you can see that. This correction, if you will, now the seller's turn comes in to see what they can do. Are they going to fully reject the price move that the buyers introduced, or are they going to just have a smaller reaction, if you will, to what the buyers have done? And in this case, they have a little bit of a smaller reaction. We see that the buyers have pushed prices up quite a ways, and then we see our follow-on correction here as being weaker than what we've accomplished, what the buyers have accomplished over the previous 10 bars or so. Okay, so this, just from a picture standpoint or a graphical representation standpoint, is what we're looking for. We're looking for this cycle line to come right down to zero. And this is a little bit of a feel part of it too. And there's a little bit of a lag here too to understand that. So as you see this, you'll understand there's a little bit of a lag. You'll start to get a feel for that. But the reason why I like this example is because you'll notice right here at the bottom we have a very nice value candlestick pattern. This is a yellow tip doji, and this is a bullish candlestick pattern. It trades in the undervalued. And by the way, this is not about valuation or using value bars, but value bars are up here as a tool that I like to use with other indicators as well. And you don't have to use, mind you don't have to have the valuation zones color overlay on your price bars. You don't need that for this setup. But there is a doji here, and the doji and the concept happening with this valley trough area can be a really nice candlestick pattern that forms there. Now, I do not have candlestick patterns up here. Candlestick bars are not being displayed because I can read within the price bar action, and I know candlestick patterns well enough where I can see that they're happening. Okay, and I don't have the candlesticks up here also because TradeStation's graphics does not support the value bars on top of the candle bars. So it gets all messed up and it doesn't work essentially. So I have to put up my open, high, low, close price bars there. But this is a candle. This is a bullish candlestick pattern. And in the context of this zero, the cycle approaching downward, this zero line, this is exactly what I'm looking for, right? And then we get the follow-on surge here. This is what we're looking for. We'd like to see it reach the previous peak. It does indeed do that, and that's what we're after. Now, let me erase my drawing here and make a point here. So how do we trade this? We're interested in beginning to buy right at that zero trough area. All right. Now, I recommend using an automated rule, not automated, but I'm sorry, rule-based logic here for entering buy signals. Now, this is not gambling. Okay, let me give you a little bit of analogy here. The MIT had a number of students several years ago who went to Las Vegas, and they learned that if they counted cards, they could actually tilt the odds in their favor, and they became the house. And they made millions of dollars doing this. This is the same logic here. What we're trying to do is we're trying to say that with the zero touch and the upsurge expected right here, with the follow-on upsurge, we now have the added advantage of trading buy signals. We're drilling down. We're not trading daily. We don't have to. At least you can maybe trade daily if you want. But I prefer to drill down to a shorter-term time frame here that's effective and use rule-based logic and only take buy signals in this red circle period. As long as the surge is happening, which typically lasts 1 to 5 to 8 bars. Typically, it's like 3 to 5 bars. It can be 1 bar if you get a really strong surge right out of the gate. It can be 8 if it just continues going your direction. But that's, in general, the time frame I'm looking to be a buyer. So I'm tilting. It's almost like tilting the odds in my success. The current of the market is favoring the upside price action, and that's when I'm stepping in to drill down to shorter-term price bars in the 60-minute tick bars, 30-minute, it can be 15-minute, whatever, and I'll show you this here in just a second. And I'm looking to be a buyer during that time frame. Okay, this is happening in real time. Yeah. So Ray, the way you look at this is when you start to see the cycle head down to zero and get close to zero here, you're looking for clues. It could be a candlestick pattern, a bullish candlestick pattern, like a bearish, or I'm sorry, a hammer. It can be even a doji. It can be a inverted hammer. There's a number of different ones that are bullish at the base here. It could be a 2-bar pattern like a bullish harami or bullish engulfing. There's a number of candlestick patterns you can look for there. But or it could be sitting right at support. You could have a trend line that comes here and you're right at that support level in the market, and if that coincides with the zero revisit here of your trend line, that's beautiful. That's a confluence, and that even strengthens the case that you should see a little bit of a market turn there. Okay, do we get this free indicator with this no, you get the free indicator without buying anything, Ellen. So you'll get an email by the end of Monday. Okay, I've been told I can say this. By the end of Monday, you'll receive an email that's going to give you a link to go download your indicator so that you don't have to buy anything. You've already got it. Does this work on futures? Great, works great on futures. All right, works great on future stocks and Forex, all those. But now what you're going to want to do, intraday as well. Yeah, it's huge. I'm going to show you some examples here. So let me keep on going here. But this is a good example of crude oil of the step one. Remember, step one right here. Step two coming down to zero line. Step three is that follow-on surge. Okay, 1, 2, 3, it's as easy as that. This is a good buy example. Okay, so number 2 here, no negative downside amplitude. And then number 3 here, strong, positive upside cycle surge. And that lays out the environment where we have almost like the MIT blackjack players. We know we can lay down some trades in that direction. I'm not looking to sell. I'm looking to only buy or take proven buy signals in this direction. And it's not that hard. There's a lot of opportunities you can have. Here's an example on the sell side. Again, rule number 1, we want to see downside price action here. Rule number 2, I want to see the cycle indicator come up this zero line. So right here, it meets that requirement right here. And then right here, funny enough, I have a yellow hat doji. So that's a little bit of a clue here that I've got a bearish doji right there in the time frame that I could be expecting my zero touch. And then I get a feel for how the indicator interacts with market. There's a slight lag here. You need to get a feel for that. And then I want to see prices start to go my direction. That's 3. Right? In this case, it really has a nice sell-off. Usually is not this strong, but it can be. Now, for those of you who follow value charts or use value bars here, you want to, at least here's how I look at it. I'm not taking new sell signals once I get significantly undervalued here in general. That's when I've seen a huge surge in my direction as a seller. And right here, I'm not drilling down taking new sell signals once I get down there to that extreme, because this is really designed to be a 3 to 5 bar setup, and it's during that time period that I'm looking to trade, not beyond that. So I'm not, this is all right here, the market slid off. I don't participate in that with this setup. This is a 3 to 5 bar setup. I'm going to take my money and run, done. Now, if you're looking to participate in a trend longer term, this could be a good setup to get in that trend. So if you buy here, you want to put your break-even stop up here at the top, you can do that. You can trade any way you want. But in and day out, this setup is not meant to forecast the follow-on trend. That's independent. It's only meant to forecast these couple 3 to 5 price bars on the downside. Okay, so rule number 1, we got that. Okay, strong downside. Rule number 2, no positive upside amplitude right there. Comes right back to this red zero line. Rule number 3, strong negative down cycle surge. All right, it's that simple. If we exceed the previous low, is that significant? Exceed the previous low. Are you talking about, Larry, buy or trough? Is that for a buy situation or sell? So tell me what your thoughts are in terms of the surge and the downside. Are you thinking more of the buy situation where you're trying to find a trough, or the valley for a buy signal? Okay, if you're going down, yeah. I think so. So that's a good question. So Larry's asking right here in this situation where we broke through these previous lows right here. Yeah, that's certainly good. It's breaking support and heading down and gives us, I think, the opportunity, or it opens the way for us to break down to another support level. So yeah, that's always good. I'd say in the surge down to break support and the surge up to break resistance. I think that adds to the potential of the price going further in our direction when that happens. Why wouldn't you have taken the previous cycle high under the zero line? Okay, right here. I think you're asking about that, Steve. This is actually another setup called the acceleration setup, but we're not talking about that today. This is another zero touch, though. You could conceivably have taken this up here, and that did have a nice downside surge as well. So that had a little bit, not super strong downside movement there. Or amplitude. It had a zero revisit here, and then it sold off. This is an example over here, potentially, of a buy setup. So a positive amplitude there, comes back down slightly below 0, but maybe close enough for government work, and then you have your follow-on surge up here, where crude oil rallied about $5 per barrel up here. Now, this doesn't seem very exciting right here in the context of this huge, massive slide in crude, but you have to keep in mind this huge slide was a result of crude oil breaking out of a 5-year pennant pattern. So this whole move was it's the exception. It doesn't happen very often. So just keep that in mind. Okay, how about a lower low in the indicator? Yeah, I think that's good. So you want to see the indicator go in your direction. I think that's what you're asking during the surge process. And then you want to see the bars. Ideally, you want to see lower high bars. Right when you start the surge, lower high, lower high, lower high. Let me get rid of all my clutter drawing here. So here's the surge high right here. And then you want to see lower high in the direction of the surge, lower high, lower high, lower high. Okay, and only expect that to happen, for 3 to 5 days, maybe 8 if it just keeps on going. But at that point in time, once we get fairly far away on the sell side from our initial setup point, then we've lost or realized our edge. Once you realize your edge, then you no longer have an edge down here. So selling down here, there's no edge for that. We want to do it up here, where the cycle is suggesting that we could have the sellers come in and continue hitting the market, if that makes sense, to the downside. Do you have present? Yeah, I'm going to show you real-time charts here in a second. I think that's what you're asking. Okay, how about let's say lower lows? Yeah, I think that's it. Okay, that's what I meant, Steve. Okay, yeah. So I think we've covered all the questions here. We have not developed this for MT4. We had a question on that, Nelson. But if you want this for MT4. Contact us at Value Charts. If we have enough requests, we've had a couple people ask for that, so I think that's something we could potentially try to make for MT4. All right, so let's go ahead. Let's move on here. Now, let me just show you a few more slides, and we'll get to the real-time slides that happen right now in the markets and see if we can find any that are unfolding right now as we speak, or even on Friday. Now, the confirmation and failure. It's like any setup out there. We want to know when things are going well for the setup. We want to know when it's failing. It's very important. But you'll get a feel for this as well. And it's pretty cool how this works. I'll show you, because even when we see failures, we don't necessarily have to lose a lot of money, if any. There's a failure in the gold cycle low or a surge setup on Friday, and believe it or not, my signal still made money on that. So that doesn't have to be a losing proposition necessarily. Expect prices to surge immediately in the setup direction. This is a great aspect or attribute of this setup. We want that immediate surge. So for a buy surge, after we have the trough here, we want to see price bars have higher lows immediately. Now, if you have one price bar that goes below the low of the other previous, does that necessarily invalidate it? No, it doesn't, but it puts us on notice. So in a perfect world, you want your surge to be very, quickly up. You could even have one bar where it just takes off and that's your surge. But in general, in a perfect world, I'd like to see the higher lows here for the buy surges, and then for the sell surges where you're looking to take advantage of that, I want to see the high here, and then I want to see the lower highs. So, regimented, and I want to see it go in our direction. Expect higher low or higher price bar lows for the buy surges or lower price bar highs in general. Now, it can violate that for the previous bar, but in general, you want to see that. The surge should be equal or greater than the initial cycle setup amplitude. So what that means is, let me get a different color here too, so it's easier to see. Maybe magenta. So if I have a buy amplitude, here's my zero line. If my buy cycle comes up here, I want to see my surge hopefully equal or better that. So when I get the fall and surge, I want it to eclipse that in a perfect world, or at least come on par with that. That'll work out just fine. The sell side, same thing. You have your initial sell side amplitude right here, and then you revisit the zero line, and then you want to see it at least come down in a perfect world to the same level as your initial amplitude. Okay. Now, when does it fail? If you see prices stall early on, like for example, if we have an upside buy surge, where you have the amplitude here, and then you have your trough, and all of a sudden you see your cycle start to kind of drift sideways like that, and you see your prices above here. Here's your low, and then you start to go up maybe 1 bar, and then you have a weakening doji pattern here in your 3rd bar that's within the 2nd bar. All right, that's a little bit of a red flag here, because this is a setup that we want to see, make progress immediately, or we have to question it if it doesn't. Now, in this particular case, if you see another bar come in and break the lows of these previous 2 bars right here, you're done. Okay, setup has failed, and the market's going to go down probably in that case. But you'll be surprised how easy it is to start detecting problems. And they do happen sometimes, and doesn't necessarily mean you have to lose a lot of money. You might even be able to get away with a small profit when this happens. It's just a very anemic up thrust in the market, dies out very quickly. So if prices stall early to the upside or downside, that's a red flag. The break of the previous bar low or high, or the 2 bar low break or 2 bar high break, meaning here's your low price bar for a buy right here, and then you have 2 bars go up here, and then you have that surge break, or the 4th bar breaks these 2 lows right here to the downside, then you're out in general. You want that should be something that puts us on notice, and probably even invalidates the surge. Now, prices, if they actually reverse below the initial low, so this is my initial low here, and I get a rally up here, and then it breaks below that low, you're out. Okay. Now, let me say this. This is why it's so important that you combine this, in my opinion, with rule-based trading. So you see this price bar right here and say, well, what, Mark, I don't want to lose that. If we have a really strong downturn, if you have an effective rule-based signal, you should be sitting out right here, because you're only taking long signals. So at least at some point here, your buy signals ought to be sidelining you, and you should not realize this whole down move in losses at all. So that's the key to this whole thing, is find that effective buy logic, and I can show you what I use, and should give you some ideas as well. So it's not difficult, but it's an important aspect of what we're doing here, okay? Because that buy logic does 2 things. It manages our risk when we're wrong, gets us out. So if this big down move happens on a daily price bar and takes out the previous low, in a perfect world, we're not even in it, because our logic has gotten us out. Secondly, the logic is great if it's properly designed in keeping us in long enough. So if we get that surge for 5 bars here, and the logic just stays with the trade, then you should be able to make some pretty good money there. And the logic will say, here's where you get in, here's where you get out on your buy signals or sell signals, and here's where you get out if you're wrong. So it's really powerful there. Do you have a zero touchline scanner? We're actually working on that, Rick. That's something that could come out as early as next month. So we are working on that. I think that'll be a pretty cool tool as well. But that's a lot more complicated to design for some platforms, not for all. Now, cycle surge tips. Look for candlestick or value candlestick patterns at the surge launch point to help identify that. I showed you that example in crude oil. So if I'm expecting a trough down in here, right, and I get that doji pattern, or the yellow tip doji, a bullish doji, or I get like a hammer pattern where I have the body right here of my candle up here that's bullish, or an inverted hammer, some sort of bullish pattern here right at the bottom, that's great. So you can definitely combine candlestick patterns with that. In fact, if everybody here's interested in me presenting that, a few of these candle patterns that we can look for in a follow-on webinar, just let me know, and I can do that. So free of charge. Okay, you stated using, we have a couple of people say they're interested in that. Stated using daily time frames. This actually this is effective in all time frames. Okay, but what you have to remember is you want your surge to have enough profit potential to make it worth your time. So I wouldn't suggest using this on 1 minute price bars. You may be right about the surge, but by the time you pay your commission slippage, you're talking about the market moving up 3 or 4 ticks. So you want, in general, what I look for is 30 minute, 60 minute. In general, the sweet spot for me are 120 minute, 240 minute, and daily. Those 3 time frames are my sweet spot, but you can find some really nice day trades quite often with 60 minute and 30 minute as well. Yep. So yeah, candle webinar will be combining a surge setup here with candlesticks. That's what I'm talking about. Okay. So does it work on minute bars? It can, but again, you want to make sure that your profit, potential here with the surge is worth your time. Okay, so that's the thing. About 1 minute is hard to trade with setups sometimes because it may not be worth your time unless you're just scalping the market. Okay. Now, cycle surge is easy to read. Unlike many trade setups in the markets, the 2MA cycle surge is easy to read in real time. Again, if you spend some time on this, you're going to be surprised how easy it is to identify this in real time. This is why I wanted to come out with this webinar this week and today, because this is a setup, again, that I think I've been seeing working really well in the markets lately and for a long time now, and it's really easy to see. All right, and this is not, like, for example, this is not a knock against Elliott Wave at all, but Elliott Wave is one technical discipline that can be very challenging to read. Like, they have, ABC corrections. The A wave needs to equal to AB needs to equal to CD. They have X waves, and complex wave structures, and it's sometimes difficult to read Elliott Wave in real time. This is not what this is like. This is something that's very easy to recognize with the 3 rules I gave you previously to follow on real time. How did I discover it? I just observed it over time. So I study the markets. I've studied them for a long time and observed them. So yeah. What are value candle patterns? Value candlesticks are combining value charts logic with candlestick patterns. So if you have a bullish or a neutral candlestick pattern that's undervalued or penetrating undervalued valuation zones, you're combining the valuation aspect with the candlestick. We've come up with value candlestick logic, and they're great. They are very powerful. So there is actually no such thing right now, and from a graphical standpoint, of a value candle. There's no platform right now in the market that's going to create that for you. However, you can study candlesticks. There is value bars out there, and you can use value bars to detect those. So it's a little bit of a new science there. We're working to try to create those at some point, but there's no platform out in the market right now that supports the graphics for value candles. So it's a combination of value bars and candles, if you will. Okay, why don't you show real-time charts? I'm about to do that. So yeah, Ross, I'll take your symbols here. Can you explain what a wave moving average is? Okay, it's not exponential. It's the difference between a shorter or faster moving average and a longer term moving average. So this calculation here at the bottom is done by comparing. It's taking a faster moving average, in fact, a faster moving average and a slower moving average, and taking the difference between them. And that's what this is doing. And this is, you can see here with the right settings, it can be beautiful. So let me show you this. This is actually a gold trade that happened on Friday, and I'm going to show you 2 perspectives, a failed perspective and the one that actually worked. I actually made a video on the one that worked here, and I'll show you the signals that I would recommend following, or at least the ones that I like to follow in setups like this. All right, I'm going to combine both these together. And it's not an MACD. Yeah, it's a little bit different than that. So so keep that in mind. So let me go ahead and show this to you. But one thing I want to do before I get started, I've had a number of traders, a number of even traders who have been around and newer traders who say, Mark, how do I trade the markets? Meaning that what strategy? How should I approach trading? And secondly, they've come to me and say, Mark, you've talked about the importance of doing your nightly homework in the markets. Okay, I've had people ask me those 2 questions. So how do I approach? From soup to nuts, tell me how I take signals, when I take signals, and what's the best way to trade the markets overall. And what I've done is I've studied this for a number of years for myself, and I've studied it for new traders as well. And I believe that I have a framework that has the potential to be very effective for helping new traders and even traders who have been around alike to actually win or make money in the markets, right? And this is what this is feeding into. So I'll tell you why I'm telling you this. The other part of that is the nightly homework. And nightly homework is very important. So when you use this setup, I encourage you to look at your daily price charts for the markets that you're trading, and even intermittently throughout the day, look at the 120s and 240s. But end of day, every day, you ought to be looking at your daily price charts. Okay, it pays huge dividends over time, not only for this setup, but for getting a feel for what your market's doing on a daily basis. That's really where it becomes powerful for you. And I've had a lot of people say, Mark, how do you do your nightly homework? Okay, so let me show you what I've done here just before I jump into this. I'm going to show you this gold setup that happened yesterday. But for those of you who are interested in this, I just created just now a on-demand workshop and webinar. Now, this is going to be a $297 product, but right now, if you're interested in this, I just launched this on Thursday, $97 if you're interested. So go to this link right here, www.valuecharts.com/plan. I'm trying to keep this cheap for those of you who have been asking for this. If you're interested in learning a framework for how you can approach trading, how you can determine buy signals or sell signals from a macro perspective, and then part 2, if you're interested in seeing how I analyze the markets with my homework every night and do drill down analysis, this is a workshop I think you're really going to like. All right. Now I'm going to go back and show you some examples of the surge. We're here for the surge, but I wanted to make sure everybody's aware that now is a special. So if you're interested, save $200. Make sure you don't go to valuecharts.com. Go to valuecharts.com/plan here. Because if you just go to valuecharts.com, you may overpay, and you don't want to overpay for this. Save $200 while you can do that. Let me drop this into the just one second here into the. All right, I'm going to drop this link in, and send it out for everybody. Everybody should see www.valuecharts.com/plan. All right. So now what I'm going to cover here, let me just talk about this briefly. I'm going to go back to the charts here. This is easy to learn keys to trading success. Now, really, I mean that. I've designed this, thought a lot about this over years. All right, as a hedge fund analyst, I've paid, my accounts that I've managed have paid over $1 million in commissions. So I've been around the block, been thinking about this for a long time. I believe the framework can be very helpful. And then how you leverage our personal strengths as humans and how we sideline emotions. That's what the plan is designed to do. So emotions are killers for new traders and for older traders. My emotions are always battling me too as far as my trading and trying to get me to make wrong decisions. So the framework is designed for every trader. You don't have to be a PhD. This is for simple. This is for simple trading, but yet very effective. I've had a lot of feedback of people who really like this so far. Now, how do I do my nightly presentations? The second part. Okay, what do I look for? Drill down, setups, and how to put the odds in your favor. It's all about probabilities. Trading is all about probabilities. And so it's about drilling down, putting all of this in your favor, and taking advantage. So what this includes, just so you can see here, is you get the part 1 trading framework. It's an hour. It's on demand. You can get it right now if you want it. Part 2 is my nightly homework prep work. That's 2 hours. I go into analyzing stocks and futures. You can see how I drill down, trying to put the odds in my favor. You get the bonus Excel spreadsheet, the trade notes template I created. You get the bonus trade statistics calculator that's referenced in part 1. All this normally goes for $297. You get it for $97 if you're interested. I'm just telling you about this because you're saving $200 now. If you're interested, those of you who have asked for this, take advantage and save yourself $200. Do not go to valuecharts.com. Go to valuecharts.com/plan. Make sure you do that, okay? Save yourself the $200. I don't want any of you to come back to me and say, Mark, I paid the $297. Don't do that. Pay the $97. Save $200, all right? Now, let me throw up the chart here, and I'll leave that link up there for those of you who are still looking at that. But let me show you what the surge I saw on Friday. All right, this is in gold. Now, let me show you the failed surge first. Now, sometimes this happens. I was looking at the 60-minute price bars here and saying, okay, great, we're coming down to a potential bottoming here on the 60-minute because we have that first up move right here. Okay, does everybody see that? So we have this first positive amplitude, and then I see the cycle line coming down. I'm thinking, okay, maybe this is an opportunity to buy gold. All right, so what I did is I said, okay, let's go over here to gold, and let's look at a buy signal for gold. All right, so that took place right here. Let me go over here and find where that was unfolding. Just a second here. Let me get my time frames right. So this is right around the 2 o'clock Central time here that I was looking. I'm sorry, no, it was earlier than that. I take it back. It was right around in the morning. So 10 Central, right getting down here to 11, right around that time period for me. So let's go to the signals. That would be right around 11. So this is it right here. So I'm going to this is my buy signal right here. And this is a tool that I use. It's rule-based, called the Hedge Fund Trader at smartsetups.com. But this is one I like. So I'm not looking to do anything but follow my green buy dots. And so that actually got me in at on the signal, or this example is 1206.80, and then it starts to go higher here. Now here's what's interesting. This is a failed signal, but I bought, or I should say the signal bought it at 12, the close of the bar is 1206.80, and then it reverses here, okay, and then goes down here. So now this is a longer term. I actually was looking at 250 tick and 500 tick. So I prefer actually the 250 tick sometimes, and the 500 other times. The 250 tick actually eked out a small profit here. The 500 tick had a small loss. Okay, so that's the difference here. So, but this is the time where I'm looking to start buying here when I forecast that cycle bottom coming up. Now, so this is an example of where it fails. I'm just showing you this so you can see. But now the way I avoided that, losing all that, let's say a larger loss here, is once I get my sell signal here, I'm out. All right, so all this downside action, and once it goes below the low here, right here on the 60-minute, then I'm out there as well. So I'm showing you how rule-based can really help you here, because you're not holding on to the trade all the way down here. You're out when your logic tells you to get out. Now, here's the beautiful thing about what happened here is on the 30-minute price chart, I thought it even had a better example of the zero touch, and it did. This is perfect. This is what I made my video on. So if you somehow thought that 60-minute was the one to take, if you have a logic that you're following, then at least you're out, maybe with a small loss, maybe even a small gain, depending on what your logic was, but you're not getting killed. You're not riding out this loss down here. You're out, because as soon as you break the low of the previous two bars right here at the 12 o'clock bar my time, then you're done. You're not going to ride it out anymore. That's the rules there to watch out for the failure. We didn't see our surge to the upside on the 60s. Now, what we are finding, though, is check out the surge to the downside. So beautiful down, okay, it's a down example of your amplitude, selling presence, force the market down here, and then you see a very anemic response for the buyers. And this is almost like a golf club pattern, higher low, higher low, higher low, higher low, right? There's no candle pattern here, but there again, we can turn to our signals. And again, I like Hedge Fund Trader. You can use whatever you want, but that got us in, call it right around the, looks like 1205.90. And then once we got our surge here to the downside, that was able to keep me in, for the entire surge. So right there, again, see how we surge. And once we get significantly undervalued, I'm not looking to take new signals there. But we got our follow-on surge. It eclipsed the low of the previous surge here. And this is where selling the market is in our favor. This is why this sell signal is attractive to take here in gold in this particular instance, because we have that 60-minute zero touch forming here, and then we can ride that out on the 500 tick gold chart, and then we're out down here. Now, once we get out down here, I'm not taking any more sell signals. This is a very short-term trade. This took about $5 an ounce out of gold, but that's the combination of surge plus this logic that kept me out here. I mean, it kept me in here and had me take that, that sell logic. So that's the reasoning behind that. If that makes sense. Value bars are going to be available. Those, I'm having some people ask about that. Those will be available in the next couple of weeks. Just stay tuned to valuecharts.com. They're actually going to split those out as a separate product, and those will be available here pretty soon. Okay, wasn't the trade well underway when the cycle turned down? Yeah, Steve, you're bringing up a good point here. There is a little bit of that lag there. Okay, so right when you're approaching, you're really kind of right here. I'm going to put the red arrow. This is where you are when you're starting to look for that sell signal. So you're forecasting a little bit here, but you see that the flatlining, the lack of luster here with the buyers pushing up the bars here is creating the fizzle, the cycle line just coming up to zero. So you are forecasting a little bit there, and then when you get your signal, you want to have a intraday drill down. So I'm not trading 30 minutes price charts on this signal with my logic. I'm drilling down to 500 ticks, and then once I get that, boom, I'm taking that signal. So that's going to evolve. That signal actually generated before you had your final confirmation of your cycle high. And this is why there's a little bit of a feel factor in there as well. It's why it's important to get that surge you're looking for fairly quickly, and why it's important to get a feel for this. So there is a little bit of a lag there, but that's okay. As your indicator approaches zero, you're looking to start taking buy signals on your logic, okay? Now, you don't need to have my logic here. There's a lot of other things you can do. You can use a intelligent breakout strategy. I gave that away for free a while back. That can be very effective as well. So that's you'll go back and watch that webinar. It's out there somewhere. But there's other logics you can do, like a short-term moving average. So if I inserted like a moving average in, like a 5-bar, when that goes negative, I'm selling. When that turns back up, I'm buying. I just like to, for me at least, I like to use some of these indicators out there, like the hedge fund trader, that that have this logic built in and have a stop loss suggestion too. Although in this case I'm doing such a short-term trade, I'm just going with the dots. So red dot is sell, green dot's buy. I like to keep things simple in my trading like that. There's no way I can misunderstand that. All right. So now I'm combining. It's not the hedge fund trader that's important here. It's the rule-based logic that's important when I'm taking advantage of that surge. Okay, can you check for higher time frames? That's a good question. Yes, Vic. In fact, I don't typically look at 30s and 60s for my setups. I'm looking at 240s and 120s. So let's shoot over here for gold and take a look at some beautiful setups here for 240s and 120s. This was a shorter term arrow, so I'm gonna take that off. In fact, what's interesting here is the 240s was actually setting up for this as well, right? So this is actually starting to come in for that zero touch here, right near the highs here, and that's actually reinforcing our 30-minute zero touch. And this came down already and eclipsed the previous low. So really nice trade action here. Sold off from peak to valley about $12.15 down to about a low of $11.97. So it's almost $20 an ounce here. Now you wouldn't have caught all that. You might have had maybe $10 an ounce potential here. But again, the 240s are showing that zero touch nicely here. This is a really nice example over here. So this was back on call it the 10th, 11th of February, where we had the 240 zero touch, and we got that really nice surge down there. That's where we're looking to be sellers. Now the reality is like all signals and setups, sometimes these unfold at night, sometimes they unfold during Europe. We never know when they're going to unfold. But if you're trading the European session or U.S. session when it unfolds, then this is what you want to look for. And all these red arrows are pointing to some really nice zero touches here. This one went slightly above, but for me, that's close enough for government work. And let me tell you why this first one right here is a great one. I'm going to go back in time, but this is why you want to read the markets and what they're telling you. I really like this one right here with the red arrow above it as a sell setup, because we took out the previous highs here right around the 1286 level. So this price bar right here is taking out those highs and it stalls out. There's no new buying that comes in. It's moderately overvalued. That's upper yellow bar segment. And at the same time, I'm getting my zero touchdown here. So that's when that confluence comes into play. You failed to attract more buying. You have a bearish divergence. You have a higher level value here, lower value here, even though you had higher prices. And then you have you're very close to zero touch there. You're looking to be a seller here now for these next couple of bars. And it does a beautiful job of selling peak to valley, going from 1286.50 down to a low of 1255. So that's about $31 an ounce there in 3 bars, 3 240-minute bars. Beautiful. Okay, Mark, do you still use the triple red alerts? Yeah, you can, Arthur. That's for the options. We have the triple red snapback. You can do any confluence play you want to here with this, all right? But now, I will say when you're using value charts or value bars, you're not going to see the significantly overvalued. You really don't even want to see that here on the time frame that you're looking at with the setup. All right, so you don't want to see it. This is another beautiful setup right here. You can see downside amplitude right here, come back to the zero line right here. This is on the 6th of February, and this is a beautiful breakdown. Somebody asked earlier, is it good to have this breakdown below the previous lows? Absolutely. Took out a lot of support here. Beautiful. I mean, you saw prices fall from called 1268 down to a low of about 1228. So about $40 an ounce got crushed here. And this is a time where you would have wanted to make have your logic make some pretty good money here. In fact, just for kick's sakes, let's say on the 6th, this is at 2 o'clock on February 6th. Let's just see what the hedge fund trader would have done there. So let me see if I can find February 6th. Okay, because those are the signals you want to take there. That's the 5th. Okay, right here. All right, so this is where things. See, I think that's right. Is that right? The 6th at 2 o'clock. I think that's right. Okay, yeah. So that's early in the morning when most of us are asleep. But this is a great setup regardless. So you can see that sell signals are doing really nice here, ripping off some nice profits from the this downside move. In fact, I would even argue that you might even, for something like this, have been better off with a little bit longer than 500 tick, maybe 1,000 tick, might have done a better job. But regardless, I mean, these sell signals, like a red dot here, sell, buy it back down here, sell it here, buy it back down there. That probably was a small loss in that trade. This next trade, if you even took it, it was a really nice profit there as well. So this one sold it at 12.49 and bought it back down here at 12.40. So that's about $10 an ounce on that trade. This trade about $10 an ounce as well. So you can take some fairly nice chunks out of the market. It doesn't it may unfold in a couple of trades here, and you might even have a losing trade before you get your winner. So if you start selling too early up here, you have the red dot sell here, but you buy it right back here. You lost probably, see exactly what we lost. That's 12.65. For this would have closed at 12.6650. So I lost $1.50 an ounce here, but I'm making $10 an ounce once our surge takes place, if that makes sense. That's what I'm looking for. Okay. These are two different things. I've got a question. Does a cycle indicator relate to the hedge fund indicator? And the answer is one's a setup. The cycle surge is a setup. You can use any indicator you want. Let me take the cycle or the hedge fund trader off and throw out another one here. All right. Here's the breakout indicator. This is something I gave away for free. So if you say, Mark, I just want I just want something for free that can be very helpful. Now here's the way I set this up. This is a conversation for another day. But you want to have a longer term. If you're selling, you want your length 1 to be longer term. Your length 2 could be a little bit shorter term. So I have a 3-bar downside length and a longer term upside. You can see how we sold really early on up here, right? Even this got in right at 12.67, and this thing rode this entire surge down here. The logic here is I'm going to sell it as soon as I have a break of my bottom line here, right? And you might even get whipsawed once or twice, but if you start selling right here at this upper area, you're short, and then this upper green or blue line is my exit. So that falls. It's slower to fall than the red line, but you don't even get out here until right here. Once you penetrate that, that's at 12.42. Now there's a whole webinar on how to use this strategy, but this is one I taught for free. I can do it again if you guys want to hear about it. But this is a good one too. I like this one a lot, and it's free, so you can't beat that. It just goes to show you just want an entry and exit logic. That's the key. You want an entry and exit logic. All right, and so even here. Let's go back over here for the setup, for the recent sell on, this would have been, now for this trade, the other one was a 240-minute setup. The setup we had was a 30-minute. So on something like this for a 30-minute, you're probably looking at maybe a 3-bar, 10-bar, So you're short up here once you break below, or right here, once you break below the red line, and then you want to wait till you cross the blue line to get out. So you're getting out right here at, call it 1280, 1280.8. You're getting in here at 1206.90. So you're taking about $5 an ounce-ish out of the market. This indicator is just called a breakout, very, very basic breakout lines here. But it's very effective. I love this strategy too. But it does take some skill. You definitely want to make sure you understand how to use it. Okay, again, now for those of you, let me just throw this up there again. For those of you who said, Mark, I want this workshop, I want to save $200, I would recommend you take advantage of that. Again, I'll put the valuecharts.com/plan. Let me just post this again, one last revisit. If you want to learn a framework with all this all plays into the framework we're talking about here, using setups and outlooks to take advantage of signals, and it's almost like the MIT team of gamblers. We want to bet. We want to trade when the odds are in our favor most. We want to become the house for the markets. All right, so that teaches you the framework, part 1, part 2, again, the nightly prep work, and then you get the bonus Excel trade trade notes, bonus, Excel, statistics calculator. Do not pay the $297. I'm going to be mad at you if you come to me and say, Mark, I paid $297. Pay the $97. Save $200, and that's at value charts, www.valuecharts.com/plan. Make sure you type in the /plan here. All right? So I'll make sure you at least know it's out there. I think you're going to like it. It's about 3 hours of content for $97 plus 2 Excel spreadsheets. This workshop teaches you the methodology of using, setups with signals. All right? Okay. So how do I make the dots smaller in the hedge fund trader? Lee, I don't think you can, and that was actually by design. We had some people getting confused by that. But if that's really important to you, shoot me an email, and I can see if I can come up with a solution. All right, if it's in TradeStation. John, you're asking, is the Intelligent Breakout strategy on your YouTubes? Yeah, it should be. John, give us a call at our helpline, and let me throw this up here. That's at the 919-935-0010 on Monday. And they'll point you in the right direction. Okay, so they'll tell you where to find that if it's out there. If we've had so many videos come out. If for some reason you can't, if everybody's interested in me doing a class on that sometime soon, I'll do the Intelligent Breakout again for free. Fair enough. And then I can't promise you that I have the indicator across all platforms for free, but I might be able to get them to create it on a number of platforms. It's available on TradeStation. That's this indicator I was just showing you here with the 2 breakout lines. All right, so fair enough. And this is a great way to enter and exit too. It's rule-based, and I can show you how to use that. So if those of you, a lot of people here say, Mark, I want access to that. I want the free indicator there. Just say yes or say, want that here, and I'll see if I can make that happen. But it's a great way to trade. I love it. So it's very powerful, and it's a really nice complement to the cycle setup. Okay, a lot of yeses here. So I'll try to get that on the calendar here and see if I can talk my team into making the indicator for free. I get in trouble with development all the time because I'm always wanting to promise things. So I don't know what platforms we can make the indicator for, but let me ask them to see if they can make it for TOS, Ninja, Sierra, and eSignal. Fair enough? Yep. So try to do that. Now let's get back to what we're talking about here, and that is, one more time again, if you want the on-demand workshop here for how to bring all this stuff together and how I do my nightly homework, go to valuecharts.com/plan. Let me throw it one more time here for everybody to see, and that is $97 right now. So take advantage of that, and it shows you from a macro perspective what I'm trying to accomplish here with the cycle surge. Now the surge is free. You're going to get this indicator for free, but it shows you, the workshop shows you how, from a theory standpoint, how this stuff all fits together for trading. Now, the reason why I love the idea of using discretionary trade-ups with a rule-based entry and exit logic is because as human beings, we tend to be really bad at our rule-based entries and exits. And when I say we, I mean me too. All right, and I've been trading, hedge funds for 20 years. I'm emotional. I mean, I'm terrible at going to the grocery store and buying food that wasn't on my list because it's a lack of discipline sometimes. It's emotions. It's what makes life as humans challenging. So the great thing about this approach to trading is we're sidelining our emotions. We're saying that we're not going to let our emotions tell us when to enter and exit a market. We're going to find a valid approach that manages our risk, that lets our profits run, and that tells us when to enter and exit. But we want to combine that with the power of proven setups. And the surge setup is a great setup to combine that with. Now, the thing to keep in mind, too, is surge setups does not come along every day. So for this 240, we actually have a number of nice gold ones. This is across really about almost 20 days of trading here, right? So we have 3 setups here on the 240s. Now, we may have some 120s. We have some 30s. I showed you the 30 on Friday. But you can find them across a number of different platforms. Now, for the dailies, you may not see these but once or twice every couple months. This is one here that's interesting. Now, I told you there might be an exception for when you might let rule number 1 slide a little bit. This is that upward amplitude right here. This is one instance where you might let that slide when you get that flatlining down into the zero, near zero touch. So we got rule 2 and 3 are very much still intact here. But rule number 1 here, I might let that slide under certain circumstances where I don't require a strong buying presence before I take that sell or the buy setup here, because this is a nice yellow tip doji. So I've got the flatlining, I've got my nice yellow tip doji, so I might be inclined to take some of my drill down buy signals during this period, even though I didn't get quite the upward surge, the previous upward surge for rule number 1 that I would have liked, if that makes sense. Okay, let me just hit a few questions. Where can I get the hedge fund indicator? Yeah, Mitch, that's actually at a website called smartsetups.com. So SMARTSETUPS.com. That's a tool that's sold there. Okay, I attended the Thursday webinar. Have not received. Robert, I apologize. I told you wrong on Friday. What happened is our team decided to do this morning's webinar as well, and so they're delaying the link send out for both. All right, so you're going to get that by the end of Monday from what I've been told, all right, as a guarantee. I'm not doing this anymore. This is the last cycle surge free workshop I'm doing for this particular setup, the surge setup, and so by the end of Monday you should receive a link for this, and I apologize for the delay, but it's for all the people who attended today too. You're going to get one mass email. If you do not get it by the end of Monday, shoot us an email at customer service. Call us at the 919 number down here, 935-0010, and we will fix you up. Fair enough? How expensive is TradeStation 1? Well, a TradeStation is free if you trade with TradeStation. Otherwise, I think it's like a couple $100 a month if you don't. So that's my understanding. Okay, have value charts, ultimate, hedge fund, orbs, money. Okay, you have all that. Okay, is your webinar and the plan? Yeah, yeah, it is. Now, I use a lot of those, Brian, so you have all that stuff. Then the webinar, the workshop here is great for that because I use, those are my favorite tools. And, you know, these tools are tools I make for my own trading. And then I share them and publish them for those who want them too. So if you've got those tools, then this workshop, this on-demand workshop here, shows you how I go about using those tools to trade. Now, it's just designed to introduce you to this framework, and it's to show you how I do my nightly homework. But I go back and look at, you know, a handful of stocks, handful of futures in painstaking detail, so you can see what I'm looking for in my nightly homework. Spend about 2 hours doing that, and I do that prep work. So when I come into the following day, a lot of times when I'm seeing these daily surge setups, I'm ready to buy. So right here, for example, in gold, if I say this is an instance where I saw my yellow tip doji, I'm now looking to be a buyer over the next 2 days. I know that before the day even starts, before the next 2 days start. So I've done my homework, and I'm not guessing which way I'm going to trade gold from a longer-term daily swing perspective. I already know that. I already know which markets I'm looking for. So just, yeah, that's why I do my nightly prep work. Okay, do you get the night? Yeah, so you get access to this, and we'll leave that up there. I think you get access to the video for forever. I mean, I say forever. It's as long as, it'll be longer, and you probably won't want to access it. But you own access to that nightly video. It's not just one time. It's not like an Apple TV where you rent it and it's gone after 24 hours. Okay, can you show on Surge setup? Is FXE? Yeah, let me throw some symbols up here. So if you folks want to see some symbols, let's start looking at some of these. Now, interesting. This is a good one right here using Currency Shares Euro Trust. All right, so the euro's been crushed here compared to the U.S. dollar over the past number of weeks. We've had some really nice zero touch setups. Now, this is a daily chart. So right here is number one. All right, so that's a nice follow-on sell setup there. I'm moderately overvalued up here. So coming into this day, you have a really nice surge to the downside. So that's this period that I'm going to put in the circle here. This is where you want to be a seller, right? I'll expand that a little bit, even the top. So, yep. So this is the period you want to be a seller. Now the next one happens here. Nice zero touch setup right there. So I'm looking to be a seller right in here. Now this is a little bit of the weakness of some of these ETFs is that by the time you get in the morning to trade this, you may have a gap down. All right, so this really didn't trade it very well at all. You see how it just, right here, it's already made its move overnight. So be careful. I would recommend trading, if you like to trade the currencies, you might want to consider trading those either longer term. So you're catching it right here with this. This is a shooting star right here where the red arrow is, and you're going to trade it in a swing perspective and get out maybe after 2 or 3 days of downside action. Or you could trade the futures or the Forex markets because that's where that'll give you a different look. Let me throw the Euro US dollar Forex, and you'll see the difference here. Okay, see how you had the opportunity for those to take advantage? It was a smooth ride down. You could take the signals. Here's the first one up here, right there, the same setup, but now I've got a smooth transition here. I got to sell all the way down. You don't have that opportunity with the ETF if you have a gap down in the cross here before the market actually opens. So be aware of that. The other thing I tell you is, see this one down here? We have this peak down here with the red arrow. This is a situation where we don't have that zero touch. This is what we call an acceleration setup. I'm going to do a pro setup or expert setups class next month in March. And do you guys does anyone want to see the tools that there's some pro tools that I've created here? Does anyone want to see those? I don't know if you guys care about that or not, but there's some pro tools that are kind of automating. Yes, please show us the tools. Okay, let me just show you this real quick here. This is not why we're here today, but let me just get those tools up here. But this is designed to kind of complement, I'm going to take off my 2-cycle MA. These are the tools that we created to call out on using pivot points, the surge setups. Like right here's the downside surge here, and this is a surge setup to sell. So this actually caught that and called out that 30-minute surge setup. And the surge bars here turn bright red when you're experiencing downside surge. They turn bright green when you get the upside surge. So it gives you a little bit of help there in the bar color, which is a nice feature. But let me throw up the euro US dollar we just looked at, and you'll see that these tools can make it a little bit automated. I talked to you about that the acceleration setup. You can see that right here. It says ACCEL by the price bars, and then you have the dark red surge. So it's just there's more setups, and it makes it a little bit easier to see when they happen. Here's an acceleration upside right here, and you can see we had a nice follow-on surge bar up to the upside. But yeah, so that's what that is. Now you don't need that for trading just the surge setup. So if you just want the surge, you're getting the free indicator 2MA cycle. But the expert setup class next month is for those of you who want to take this to the next level and say, Mark, what other setups are out there that I should be watching? And it's the same framework though. You want to drill down, and then you want to trade. Like in this case, I would drill down to intraday euro currency price bar, so EUR USD, and I'm taking the sell signals on this when I get those. Okay, with my sell logic. So depending on the buy or sell, like recently we just had the nice buy setup called out on the Pro Tools. Let me show you that real quick right here. This was on the 20th at 11:30. So that was yesterday. Let me show you on the breakout logic. Now for the buy here, you want to have the 3 bar breakout on the top and 10 on the bottom in general. Actually, this is pretty short term. So that's probably in general what you're looking at. So you're buying once you get the breakup up here, and that broke out at buy level of 113.35, and then you're getting out up here at 113.64. So this is a very short-term, 30 pip type pop. This is intraday. That was a short-term 30-minute price bar there, right? This is actually, let me show you the daily here. I didn't even show you daily there. So yeah, you see all the surge setups here, acceleration there, surge there on euro currency. Did a really nice job nailing a lot of those to the downside. Caught this little quick surge to the upside here, right? That's even a very short one. The bar did shoot up here, and then caught the reversal here to the downside again. So there's a lot of different types of surges. These setups do not work every single time, but they work a lot of times, and they do a really good job nailing it. Look at crude oil, for example, on the dailies. Killed it all the way down. I mean, these setups. I mean, look how many setups you had the downside, and then right here it actually reversed and had a nice surge to the upside there. So it caught 2 nice upsides at the end, caught a lot of downside setups, and that's the benefit sometimes of having learning all the different setups you have. But for today, just learn the surge and learn it with the free indicator that you're going to get by the end of Monday, the 2MA cycle. It's very powerful, and if you just trade with that, I think you can find a lot of really good trading opportunities, if that makes sense. Okay, again, for those of you, just want to throw this up here, valuecharts.com/plan. For those of you who are interested in the on-demand workshop, make sure you check that out. Save yourself $200 and check that out. Okay, CMG Daily. Let's check out some markets here. CMG. All right, and then I'll check out Priceline after that. Now, CMG, we had an acceleration. We're not here to learn that, but you can see the acceleration set up down here, where the CMG got crushed. Chipotle right there, and the acceleration to the downside. That might have been earnings right there. Nice. This is not a bad upside surge right here. Now you'll see that this has the characteristics we're looking for right here. So I'm looking at my blue arrow. Let me move my chart around here. So right in the middle of my screen here, I'm getting my near zero touch here, right? And so if you start looking to drill down for buy signals here, you get your surge. And I like this because you have your higher lows, excuse me. So higher low, higher low, higher low, higher low, higher low, higher low. So about 5 bars in a row. And then this is what you want to watch out for. You see this top bar right here? This is a yellow hat doji, very bearish. Okay, so that you see the yellow hat doji after you've run out for 5 days, you're done. I mean, I would not suggest buying after that. If you're not out of your long signal by then, get out, because that's usually a very good setup right there, especially when we're expecting a peak. Nice cycle action here in the 2MA using the 5-8 combination. Let me touch on that real quick. How do you set up the parameters here? You have a fast length and a slow length, okay? And the combinations that I like the 5-8. That's a good one. I like the 5-14. Some people are fans of the Fibonacci numbers. 5-8 or sequential Fibonacci setups. You could do a 9-18. So 9's a short, 18's the long. You could do a 9-21. But 5-8's a good one. I like 5-8. 5-14's a good one as well. So sometimes I use both 5-8 and 5-14. Let me throw up the 5-14. So yeah, this is an example of both. Now, having both up there, sometimes the 5-14 catches something the 5-8 didn't catch. Like a 5-8 did a good job of catching this one right here. It didn't come all the way down to the zero line, but came down pretty close here. And that's the top version. I'm essentially adding the 2MA cycle indicator twice here. On the bottom, I could even make this a 9-18 to look for a little bit longer term setups here on the surge. So see how that's a little bit longer term? It's hard to see it here. Sometimes, like especially during these consolidation periods, the longer term's not going to be helpful right here, right? And even the shorter term in general, when you're seeing this type of consolidation, you want to just be aware of that, and you want to not necessarily trade that. Okay, we're looking for a little more price action, and we can see here during the middle part of our chart we saw that. Let me throw up Priceline, PCLN. I typed that in correctly. I did. Okay, so Priceline had some good ones here intraday. I guess that's what those ovals were from Thursday's session. But we have a slight underwater acceleration here earlier. Not a lot of surge setups in the dailies. Okay, this is why I recommend you take a look at the 240s as well. Okay, so yeah, 60s actually had some nice ones. So we had a nice one here in the 60s, 2 nice ones in the 60s here, the zero touches. And then one right here again that didn't really pan out. This one right here, and here's a little bit of the red flag for this third one. Look here, I have my yellow hat doji after 2 bars. That's the type of neutral bearish candle I'm looking for, and I really have a lack of a surge, so I'm not seeing that surge I'm really liking there. This one actually worked out really well right here, and this was a hammer pattern low right here. So you get the hammer pattern. Now the risk here is I'm assuming this was some sort of earnings report that caused prices to gap up here, but this was a perfect setup. The only exception here is we're not getting that initial amplitude, buy amplitude surge here, but it did come back down to 0. But I will say this in general, that this is probably one I would not have looked to trade because I'm in that consolidation period, and that probably was due to the fact that the Priceline was due for the earnings announcement. Again, that's what I'm expecting to happen there. Okay. So why wouldn't you use cyan instead of dark blue? I can. Yeah. Let me just throw this up here. If you want to change the color, actually, I can change the color of my dark blue to cyan, and make that easier to see. All right, I'll do it for both. So, all right. I don't know why I use dark blue. Just have it probably. Okay. Thank you, Mark. It was very helpful. Learned a lot. Learned how to use Cycle Finder much better. Yeah. This Hossein, this is great with Cycle Finder as well. So have a great weekend, and tell your daughter not to have a great class too. let's see, please show the hedge fund trader and cycle indicator on the same chart. Okay, now these are not two that I want to have on the same chart. All right, so keep this in mind. What I want to do is I'm using a longer term here. Let me throw up the 240s here too. Longer term to find the setups. All right, and I'm using the shorter term to find the trades. So to 240-minute, I'm not seeing really any surges here. The only one could be right here where the cycle line on the 5-8 combination dipped below. I'm going to go ahead and take out the bottom one here just to keep things simple. But right here could have been one we might have traded. But in general, I'm looking to have my hedge fund trader on a shorter term chart basis. Does that make sense? So I want to drill down with the hedge fund trader, whereas I want to use the 2MA on a longer term because I want the setup to be longer term and forecast several bars in a row or time period and that I can use to trade. Now you definitely want to drill down to trade them. This is how I like to trade. And the reason why is because when you drill down to a shorter term time frame to trade a longer term setup, you have a lot more data points to drive your rule-based entry and exit logic. And that's a good thing, especially if you get your setups right. So if you start getting good at identifying your setups, then that's a good thing. So there's a lot of acceleration setups here in Priceline that aren't showing up. Let me throw a Priceline up on the Pro Tools here. So second PCLN, see if our, yeah. So we got one acceleration setup here. We have a couple downside. The surge here didn't go anywhere, so that was a false signal. Great surge setup here. So that was a great setup. A great surge setup here. Now this is a little bit of a warning. Let me give you a little bit of a warning here. All right. You need to be aware of earnings. All right. So we have an acceleration here that panned out. We have great surge setup right here. All right. But look what happens. You have 2 days of nice surging where you probably made a ton of money here on Priceline. But you've got your, after day 2 here, which is November 3rd, you have, looks like your earnings. You do not want to hold a position in earnings unless you understand the risk, right? So the surge was right, but then earnings came in and caused a reversal of the market. So you can get that gap if you're not careful. So make sure you're aware of when earnings announcements come out for the stocks that you're trading. All right, you can look that up ahead of time and make sure. Your broker can tell you. You don't want to be long into earnings here. At the very least, you'd be closing out your trade here in the close because of the earnings announcement, if that makes sense. Okay, use double screen with one long and one short term. Okay, let me see if I can do that. Just 1 second here. I'm going to copy. By the way, if you've never copied your window here in TradeStation, you can copy and paste a window to another screen, which is a really nice feature. Okay, so I pasted this in here. So I'm going to make this my bottom half screen. Okay, I think I can do that. All right, and I'm going to make the, let's see, the cycle. Let's pull up the Priceline daily here. That's not it. Priceline 240. And I'm going to make that my top one. Let me resize that a little bit here. Okay, so let me make that the larger one. I'll make my entry dots the smaller one. Okay, so what markets you guys want to see? Now, keep in mind, stocks sometimes can gap. TLT, I think, is that a symbol? Is that? Okay, Treasury Bond ETF. Yeah, so really nice setups here. Now, again, the thing you have to be careful with, okay, with the, I'm going to go ahead and put TLT down here too. Let's make this a 60-minute, okay, TLT. All right, so the thing you've got to be careful with here is that, am I looking at this? Oh, this is 240 up here. So this is probably going to, that's daily down there. I want to make that like a 30. Okay, so up here, let's say right here on, this is a zero touch right here on the 12th. So what I'm doing here is I'm waiting for my next sell signal, sell dot right here in the drill down. So I'm using a 30-minute. I've got 240-minute on top, and that's fine. I like 240 for my setups. And then right here on the 12th, I'm getting my zero touch. So I'm looking for my first sell signal here, and I get that. And it's a nice, smooth, downside. So I made some money here. sold it at 130.26. A couple days later, got my buy signal at 126.29. So it took a nice chunk out of the ETF here, so that worked out pretty well. That's what you're looking to do. And if you're fortunate where you get the surge in your direction, which we did here, then and you remember, recall my rule: once a market gets significantly undervalued here, you're not taking new signals at that point. Okay, so that's in general. Now you don't have to have value bars to trade this at all. Keep that in mind. All you need is your 2 MA cycle indicator. We've got that. And then again, if you don't have an entry exit logic, I'll try to do a webinar here on the intelligent breakout, but hedge fund trader is one I really like, and that did a really good job here. Red dot sell, and then green dot buy it back. Okay, I can't look at the charts intraday. Yeah, you could do weekly. Now, Mitch, you bring up a really good point. Let's take a look at some weekly stuff here. Weekly setups are great. You could trade weekly up here, and you could trade daily down here. So I'm going to daily here. Now, let's say right here, let's say for argument's sake, this is the zero touch we're looking for. Now, it went slightly below our zero line, so we may say that's close enough for government work. This is actually qualifying to be a reversal pattern as well. So that's back in November on the 21st. So let me go back. November 21st, right here, funny enough, we actually got a buy signal. So you can take that buy signal on the daily basis here with the hedge fund trader, and that bought at 118.62, and you could have ridden that up to your sell signal at 126.17. So you're taking advantage of a weekly surge here, and the weekly surge is going to could last for upwards of 22-ish, or quite a few of your daily bars. Actually had another additional buy signal here. This wasn't part of the original surge. This is probably more of an acceleration here. But right here, we also bought again at 125.08, and then we're selling at 135.37. Now these are not trades that I took here. Important to understand that. This is just hypothetical, what could have happened, and understand there's risks and limitations and hypothetical. So I'm not wanting you to focus on look how much money you would have made on this trade. I want you to focus on the concept. Longer term setup, shorter term signals. And you don't have to use, hedge fund trader. You could have used, in this case, you could have used the intelligent breakout, right? Okay, Diane, are you asking me a question? I'm sorry, I'm not seeing that. I apologize if I missed that. Okay, if I can't look at intraday, wouldn't it be best to start with the weekly setup and drill down to daily? Mitch, absolutely. Let me throw up another example of a weekly here. Let's throw up Apple. Okay, beautiful. Let's throw up Apple on the dailies. So the weekly daily combination is great. Right here, we had a nice. I think this is not bad. We might have taken this one. This is on the 18th of April. So I got to scroll back here a little bit. See if we would have caught that with our hedge fund trader. Yeah, so April, yeah, so we've got a buy signal there on the 21st. So this is weekly, so whenever that buy signal comes in, we can buy that. And that buys at, that got an Apple at 75.51, gets out of Apple at 84.55. So you took out, nice, almost $10 a share, not bad. And then I had a nice follow-on signal here. I don't know if there was another. Yeah, I mean this technically, because the surge was continuing for a number of weeks here, you might have been able to take this next signal too, and that bought at 82.83, end up selling up here at 93.76. Now, again, the importance of finding a longer-term setup with shorter-term signals. And again, I'm a big fan of the rule-based signals. As long as your rule-based signals have been tested, the logic is sound, they're good at managing risk, they're good at writing out profits when they go in your direction. Okay, put your pointer tracker on. Okay, yeah. So John, anyways, hopefully you can see this. I'll try to press down here so you can see the bars I'm looking at underneath my arrow. So, okay, if you use the tracker icon on the Okay. Oh, I see. Shows your crosshairs. I haven't used that very much. Let me see if I can find that. Okay, so let's. I'm going to do this for the workspace. Let's see if this works. Okay, yeah, right there. See, that's a good suggestion there. So I'm finding my setup here, on the weekly, right? And then I'm writing it out on the daily. So this is more or less where it ends, but I'm in the middle of a trade, ride the trade out through the finish line. Here's a recent one as well. So the recent one here is, this could have been a setup, and you go slightly below zero here, but might have been close enough for government work. And what protects you here, this is really important to understand, is that even if you're wrong and this wasn't, with the rule-based logic, that's what keeps you safe. So then it does surge. We get the higher lows here on the weekly, and then we do eventually get our buy signal here on Hedge Fund Trader, and that holds that, you get in at 176, get out over here at 116.12. So ends up writing that out really nicely. And here's the thing also to remember, if I have a surge and my surge kind of wraps up and finishes up, it's okay for me to hold my signal through completion if I want to do that. So my signal actually doesn't exit until the surge is actually already over with, but that's okay because I'm following the logic here and I'm okay with doing that. So just understand that I'm just not taking any new signals once my surge has run its course. Okay, hedge fund trading indicator. Yeah, you can get that on smartsetups.com, Mike, but that's not, you don't have to use smart setups, or I'm sorry, you don't have to use the hedge fund trader. I really like it, but you can use, there's a number of different trading logics here you can use. So this is just one I throw up there because it's easy for people to see with the green dots and red dots where to buy and sell. So it just makes the point of drilling down. Let me throw up another example here. Let's take a look at maybe bonds. I don't know if any of you trade bonds. Yeah, so let me throw up bonds down here at US. So this is another example of weekly. Nice weekly setup right here, right? And you're actually in the midst already of a trade. You're already along the market. So it's okay to, what I do in this case is try to get strategically as much as you can long that. But if you're in the midst of a weekly setup, and you're already long down here with your signal, then you can still take advantage of that as well. So right now, this is a good example too. We saw the weekly bar coming down. It looked like I might start looking for a bottom here, right? But we haven't had our buy signal. So this is now blown through zero. This is invalidated. It's not a surge setup anymore. And right here, you can see that we didn't even have buy signals, so we wouldn't have been sucked in on that in the event that we thought it could have been, a false surge. Let's throw up another one. What about Google? Let's see what Google's looking at. Again, this is the weekly daily combination. Let's throw up Google down here. Okay, so right here, this is a great setup, great zero touch right there. You can see we get a sell signal on Google, and we make a little bit of money downside. So we would have sold it at 546, bought it back at 517. So not terrible. Make a little bit of money there. Is that right? Okay. This says buy at 511. Yeah. So okay. So yeah. So it just depends on how you read that. That's not huge profits there, but still does work out. This is a good one right here, where that's a really nice, good a buy signal there. So let's see. So let's go over here, and that might have actually been before an earnings announcement. Let me go over here. So right here, yeah. So that's right before earnings. I don't know if you would have taken that risk or not, but the hedge fund trader had you long, taking advantage of that surge right there. And then sure enough, we get the gap up. Again, you're taking a pretty big risk if you're trading in the face of earnings announcements. Let's try, see any other markets? Okay, on Google, if you had used options, yeah, exactly. James, that's a really good point here. And that is, if you're facing this situation right here where you know you have earnings coming up, but you have a surge setup, then you could, come in and use options, right? So once you get your buy signal, let me go back over here. Okay, once I get my, is this right? So once I get my buy signal, go over here in setup right here. I have my surge on the weekly. I can use call options right down here where I get a buy signal at looks like right around 435-ish, and then sell signal is at 517. So yeah, killed it. If you would have bought long options there on that signal, that would have been beautiful. I had to do a class on just using long options and short options. Let's take a look at SPY. Okay, SPY, the ETF, and do the same thing down here, SPY, and then okay. So let's look at, have we had any good setups? You know, not a lot. This is one of those things where sometimes you get them and sometimes you don't, but not a lot of good setups here over on the weeklies. Let's look at dailies up here, and then I'll drill down shorter term. Okay, so you had one potential here on the daily. Let me get this, make this 60-minute down here. Okay, so right here, you had a zero touch. You can see where that's coming in over here in my chart. I'm going to realign this here. So right here is the zero touch up here. So you could be looking to be a seller right there. Okay, I don't know why it keeps on doing that. Just a second here. Okay, so yeah, it's continuing to load my data here. So right here, yeah, so you got the sell signal here, but the sell signal bar on the 60s really had a lot of movement there. I'm not even sure 60s is a good time frame for that. Maybe 30s would be better. Okay, TradeStation takes forever to load this stuff sometimes. Okay, so 30s right here, you had two. Yeah, it just didn't trade it very well because you had a gap. You're having gaps in the market. So that's what you've got to be careful with. Now, dailies, I think you can get away with that, trading the dailies sometimes with these setups. In fact, let's just see what that looks like. So for SPY, I've got my daily chart here. So if I have my, let me get rid of my chart background noise there. Just a second here. Okay, see the signals here. So if we get rid of, or if we have that sell signal, sell setup, see right here, you see right here. So let's say we're right here and we're looking to sell into the downside surge. Yeah, that was in the midst of a sell signal already that looks like it ended up being, you know, maybe even small loss or break even. So we didn't get much of a surge there on a daily basis. So having, you know, trading with your logic on daily and the setups on daily, in my opinion, just doesn't get the results that drill down does. But the challenge sometimes with your ETFs, if you're trading, you know, across several days with the daily setups, is sometimes you have the gaps that you have to be, you know, mindful of. So FB, Facebook. Let's see what we got here. Facebook. Okay, you know, let me show this on even. Yeah, beautiful daily right there. Facebook. So let's say we caught. Let's see, nice. This is a really nice sell setup right there. So right there, I mean, it was already long or short actually. So it was short down through here, but that's on daily. I'm sorry. Let me go 60-minute here. Okay, so why is it doing that? Let me figure it out here. Okay, so right here, let me pending data. So it takes the TradeStation a second to load this up. Let me see if TradeStation can load my 60-minute bars to fix that. Okay, premium on options around earnings. Yeah, it is usually high JV, but you can look at like a vertical spread sometimes. So that'll help address that a little bit. So you're not getting killed so badly on your premiums. So, okay, can you forecast any stocks next week? Yeah, let's we can just take a look at something. If I don't see, now here's the thing about this. This is not an everyday setup. So if we see a setup for next week, I can definitely point that out. But just be mindful that it's not. Yeah, I'm not sure why TradeStation is doing this. Let me see if I can fix the symbol down here at the bottom. Settings, 60-minute. Okay, so 5,000. Let me make this like 3,000 price bars. See if that fixes it. Okay, here we go. So, and just be mindful that that this is not an everyday setup. So when we see the setups, we can trade them, but when we don't, you know, you're standing aside. So this is a good setup right here for Facebook, and you already had your sell signal, and then you drill down to the 60s. Hedge fund trader has a short position, so you probably take out, call it, let's see, 77 to 75, so maybe $1 or $2 a share here. This is a shorter term. You know, it didn't really have a substantial follow through. This is a nice upside one right here. So let me go back and realign my charts here. So this would have been a nice one right here, a zero touch to the upside. You can see that hedge fund trader got in at a nice level there. Looks like 76.10. You're getting out at 80. So you're taking it's 80, 76. So you're taking out about almost $5 a share or $4 a share. So that's not bad. Another nice one here. It's a 2 in a row. So this is not bad right here. So, but this is already long into that setup. You do get a little bit of a surge, and that looks like a profitable buy signal. but the secondary one right here is a much better one. That has a really nice 4-day surge there. So I really like that one. And then you have your sell opportunity right here. So, and that was profitable on the downside. So 0 touch in the downside, 2 0 touches in the upside. This is not quite, that's a little bit below, so that may not be one we want to take there. As of right now, I'm not seeing anything as of current. This is actually an acceleration setup on Facebook. So I'll throw up the, let me throw up the Pro Tools to see if the Facebook would be registering that. So yeah, well, it has a surge register right now. So Facebook is actually in the midst of the Pro Tools buy setup right there. So if we would have taken the, the drill down, we could have bought that at, call it 76.58, and now we're at 79.89. It's not bad. So it looks like we're going to lock in a few dollars per share. Okay, can you please look at a DE long and a near term, please? DE is, yeah, DE. Let's take a look at that. Okay, yeah, DE just had a beautiful 0 touch, so they're really nice. Let me go, see right here, I'm not sure, let's see where we are here in the, okay, so right here, this is a nice 0 touch, but I'm not sure 60-minute is the right time frame. Let me show you how to use ticks as well here. So I'm going to throw up maybe like a, let me throw up like a 100-tick chart here and see what that looks like. Okay, I'm going to compress that a little bit, the downside. So right here is a beautiful 0 touch, and it actually buys it. Let me see where my, okay, my line is right here. Let me adjust my bottom chart just a hair to the right here. There we go. So this is a much better time frame. The 100-tick actually worked out really nicely here for your intraday trading. Let me see, go here a little further. Okay, is it gapping up on me? I'm sorry. Okay, right here. And this is the 12th. So yeah, it's not whatever. My charts are skipping around a little bit here. So let me advance this, and you can just see this. So we had a nice buy signal here in that trough. That was a little ahead of the 0 line, but not much. You could have jumped in on that, and that bought it at 89.31. End up selling it at 89.69. So yeah, so not a lot of, yeah, a little bit of a surge up there of a couple dollars per share, looks like. So from a low of 88 to a high of 92. So there's a little potential profit in there. But, in general, let's take a look at this longer term. I'm not seeing a lot of directional movement here, a lot of sideways trading here. Really nice. I'm going to change this to daily down here. Really nice 0 touch here on the weeklies. And I would pay attention to the weeklies. If you're kind of an end-of-day trader, you can see right here we have a 0 touch down here, and that would have given us our signal down here. We have a follow-on sell signal right here. So you have a nice sell signal there, 2 in a row, where you would have made some profits there, looks like, in shorting Deere and Company. Right now, I'm not seeing anything. There's no surge setup on the weeklies, the dailies. Yeah, so we're just peeking out after. We had an up run here from the most recent. This is a really nice one. And you had your, excuse me, Dragonfly Doji here. So that was really nice. Again, if I ever get a close and significantly overvalued there, I'm usually, that's my uncle point. If you're trading on dailies, that's where I'm looking to exit, because that's when prices have really reached an extreme. The risk you take there is if it just keeps on going, but it usually doesn't. Usually you see a value reversion there. Okay, what is your take on CSTE? CSTE. All right. Let me put that on the bottom too. CSTE. Okay, that's all right. So yeah, not a bad. See, the cycles aren't doing a bad job here of tracking this. So that's not bad. We're not really getting, this is a good 0 touch here to the downside right here on the dailies. I'm not seeing much right now. This is a little bit of a guess right here. So right, you could, if you get a sell signal on Monday, you could conceivably, like I'm looking at the hedge fund trader. If I got a sell signal on hedge fund trader on Monday, I could conceivably look to take that. We're slightly above 0 here. But I think Monday's bar is going to tell us a lot about whether we're actually in in the range there to take advantage of that. That's actually, I need to drill down here too. So let's see here. So for the sell signal, I would use maybe 60 minutes or even some tick charts. Let me see if I can get maybe 100 tick up there. I don't know why it's compressing here, pending data. Just a second here. Try 100 tick. There we go. So if I got a 100 tick sell signal, I might be tempted to take that in forecasting, potential zero touch here. So it's pretty close. So that could be one you may want to look at. The reason why I'd be comfortable doing that is because look at my cycles. My cycle high here is pretty consistent, and we're looking to be due for a cycle high here. So moderately overvalued up here. So I would feel comfortable taking my next hedge fund trader sell signal or whatever logic you use. But the important thing is use a logic. That way, if you're wrong, it gets you out. You don't hold on. You don't do what us human beings tend to do and hold on to your losers and cut your winners short. That's the beauty of a logic, right? So yeah, I think that there could be a zero touch setup right here, and I would probably be, if I were trading the stock, probably be willing to take a sell signal on something like the hedge fund trader to see if I can catch that if it ends up being a downside swing there. SPY. SPY, I don't think we had anything. Did we? Yeah, right now nothing yet. We're not at zero. We're coming down from a lower high here, but yeah, I don't have any setup for that on the daily. Am I looking at the right? Yeah, Spider, S&P, yep. 2MA bearish divergence. Yeah, it is. Now this is a topic for a different day, but you do have the bearish divergence there. That is valid. But you have to be careful with divergences as well, and really expect that divergences need to turn around in a really timely manner, or they could be expensive, FLX. So there is a way to trade divergences, or they can be very helpful. I certainly watch them myself. Netflix you had a great yellow hat doji on the 19th, but I'm not seeing anything from the surge that tells me there's a setup there. Let's look at the weeklies. Yeah, not much there. It had a what we might almost consider to be a let's do Netflix again. Just a second here. And X, let's type it in slowly. Let's do this on the dailies since we're looking at the weekly setup. So for this setup right here, you might have actually been able to take advantage of that. That was a nice buy signal with the hedge fund trader. You would have bought it at 415, and then it ends up getting out of it at 486. No, I'm sorry, 472. So yeah, not bad. So you're taking out about $55 a share. So this is a wild shot when it comes to trading. It's a pretty active stock. But right now, nothing. I don't see nothing on the weeklies, nothing on the dailies. And keep in mind, it's not an everyday setup. You see these setups maybe once or twice a month on the dailies. And then when you drill down, let's take a look at the 480s here to see if there's anything there. Okay, 60s, not much. Sorry, 480s. I should do 240s. I don't know why I just did that. All right, waiting for that. When I type in the wrong time frame, sometimes it throws TradeStation off. Let's try 240s. Okay, yeah, 240s, interestingly enough, could be a zero touch here. So let's throw that up for Netflix. You're in a daily long currently with the hedge fund trader. So if I'm trading 240s, I might even do like a 30-minute bar aggregation. I want to drill down. So my 240 setup could be traded on the 30-minute or tick. Those are the two I'll probably look at. So you've got a buy signal right now. You're working off of on the 30-minute. You've got a potential zero touch on the 240s. So you could conceivably trade that. So again, the logic is the important part, because if you're wrong, if this ends up fizzling out and not being a valid signal, then this is going to protect you, your trading logic. ULTA. Let's take a look at that. ULTA. Okay, nice 240 surge. ULTA. This might even be one I would look at for a tick. bar here. I'll pull up dailies here in just a second. TradeStation on the weekends sometimes can be sluggish in loading data. So one last time here also, let me just remind you, we've got your special on the workshop while that's loading. So don't forget that. So I'm going to put the link up there for everybody to see again. So make sure you go to www.valuecharts.com/plan. Save yourself $200 on that. So take advantage while you can. All right, so let's take a look here at intraday. This is 30-minute off the 240. You're actually working, for over here, you had a nice buy signal. 30-minute actually worked out okay. So you had the setup here, and that's, let's see, getting you in at 136, and the exit wasn't great at 137. So just a little bit of profit there on that. So not too terribly bad. In terms of what this might be doing, let me pull up the dailies. Dailies, okay, now here's an interesting one. This is a really good example here. Dailies right here are flashing potential zero touch, right? So right here, and I'm in the midst of my daily buy signal here, right? So right here, I had my buy signal, and I could have jumped on that. It surged up, so you would have been profitable there. But here's what you have now in the dailies. You have a bearish yellow hat doji that broke the previous highs and closed below them. So I'm actually not looking, for me at least, I don't know that I'd be looking to take the follow-on buy signal here. Now it's profitable, it's making money, but that's a judgment call there. I don't typically like to see that bearish candle right out of the gate, even though with the drill down approach, your first trade conceivably was profitable. So is Smart Setups? Yeah, Smart Setups is actually it's a joint venture between hubertcenters.com and valuecharts.com, and the goal of Smart Setups is to create tools that we feel like can be really helpful for the everyday trader and are powerful for traders who want to take it to the next level as well. So, okay, you mentioned the last webinar about favorite setup workshop. Yeah, this is the expert setups coming up in March. How will this workshop be different from the ones you sell? This will be a valuecharts.com workshop. So it's going to be me focusing on using a number of different powerful setups. And the cool thing we're doing this time is we're actually going to bundle some of the powerful tools in that workshop. So the workshop price is not only going to cover the workshop, but it includes a number of the tools that you can use, new tools, to uncover some of these setups. So that's the cool aspect of that. So that's what's different. But I'm going to go over a number of different setups that you can look at and that can be helpful for trading the markets. See, 2MA should be sent out. We'll send you the link. You should have it by the close of Monday at the very latest. All right. Well, we've gone over considerably today. It was great seeing everybody here today. Hopefully this gives you an idea of how to use this setup and just play around with that. Once you get your indicator on Monday, then play around with it and look for the zero touches. You don't want to have a lot of negative action like this. So this was a lot of negative. That is not the surge. Now this ended up being a reversal setup, which is fine. But you want to see like this one over here to the left. This was more of a zero touch right there. That's what you want to see for the surge setup. So keep in mind also that it just doesn't happen every day. So it's it's one of those setups that comes over time. And then intraday, I still like this. You can do 60s, 30s, but I tend to like the 240s and the 120s are two time frames that I like to watch quite a bit and trade from. And you can get some really nice setups, as you can see here, on gold and crude oil, a number of markets on that time frame. Okay, will all the value charts and smart setups indicators work on Thinkorswim? Yes, they will. Yes, they do. Looking forward to seeing you next month. Randall, thank you. Looking forward to having you there as well. Okay, bought the plan videos yesterday. Good, very helpful. John, thanks. If you have any questions, shoot me an email at customer service. They will forward it to me, and I will answer those best I can. Can you use range or Renko bars? That is a really good question. I typically haven't used those, but let's throw some up here to see. I'm just using the standard default settings here and see if that is going to work. Sometimes TradeStation takes a year to load these up. So My answer to you is try it, and see how it works. I tend to recommend time bars for the setups for the surge, but you can also use tick bars as well. But again, my favorite time frames for that are daily, 240, 120. Is this presentation recorded? It is recorded. Now, one thing I want to apologize in advance about is sometimes the GoToWebinar recording sound is just not great. So if you can put up with that, then it'll be available for you. But sometimes I'll try, at least with the paid webinars, we're going to try to have more of a professional recording done. But when I just do the free workshop webinars on weekends and whatnot, we don't always have that done. This presentation is recorded. It's always good to learn, Mark. Thanks. You and Hubert are the best. Thank you, Ken. I appreciate that. Are these indicators good for Ninja? Yeah, absolutely. They all work in Ninja, and same concept. Okay, premium membership. Dan Sol, call us at customer service for that. They've actually modified the memberships lately, value charts, and they can tell you exactly what's going on with that, what the new options are. Okay, Tom W. does a great job in the trading room. Tom Wood does a great job, yeah, and we're lucky to have him, and we're lucky to have David Kino as well. Okay, well, everybody have a great weekend. Again, call us at customer service on Monday. You should have a link for your free indicator by close of session on Monday. I'm going to really push the team to make sure they do that. But the delay for the Thursday, folks, again, I apologize, was today's webinar. They wanted to send it all out in one fell swoop and work with customer service issues, if there are any, in one fell swoop as well. Okay, do you have any value charts bundles that compare the hedge fund indicator? The hedge fund indicator is actually different, Brad. The value charts bundles I tend to use for setups. Hedge fund indicator is a signal generator, so that's one that I use for hard and fast entry and exit signals. Ray, thank you. Okay, Ken, everybody else here, TJ, James, Michael, Tom, Randall, everybody seeing you today. Great to see you guys here, and you folks here. Pete, thank you very much. Have a great weekend. Appreciate everybody staying over today. Sorry I ran over, but I'd rather, I guess, spend too much time than not enough. So let me know how the surge works for you. It's a great indicator. It's very simple, but it's amazing how this setup just tends to unfold over time. Just a very simple one. And play around with the settings. Don't forget, you can modify the fast and slow settings here. Let me see if I can actually get this right. Okay, I may have to turn this off. Okay, let's try this again here. All right, so inputs, fast length and slow length. Your fast length needs to be shorter number of bars than your slow. Play around with that with the different markets you look at, and look at 5/8's good combo, 5/14. You can try 9/18 and 9/21. Those are just a couple I look at and play around with, and they should be hopefully helpful. Please add me to your mailing list for Monday. Yeah, Pete, you should be on it. If you're here today, you should be on the mailing list. Rajesh, thanks very much. You have a great weekend as well. Pete, and Brian, everybody else as well. Okay, we're going to go ahead and wrap it up here. Again, if you have not taken note, actually, I don't want to close that down. Let me stop that. If you have not taken note of the link, valuecharts.com/plan, then please do so and take advantage if you're interested. I think it'll be something that's very helpful for a lot of you. And the hedge fund trader does work, Gary, on TOS. Yeah, so check that out and save yourself $200 right now. It just released on Thursday. I think it's going to be helpful for you. Just think about the approach I'm using to trading the markets, and the approach is designed to overcome our human emotional weaknesses. I like it a lot for myself. This is the way I trade, and I think it's going to be something that's very helpful for many of you as well. Have a great weekend, and look forward to hearing how the 2MA indicator works for you. Again, you'll get it on Monday. You get the link, and you can download it. Give us a call if you have any questions, and we're always glad to help. So enjoy your weekend, everybody.